Good morning, morning, morning. Let's see if I can adjust this mic really quick. Sorry, guys. Get a couple on. All right, cool. We'll give everybody just a hot second. I think we are good. Sorry, I'm in a couple trades also. But anyways, if you're just tuning in, welcome. This is where I do, sometimes I'll have a couple of the traders come in, by the way. I don't know if they're going to make it today. Let me pull up our internal meeting. Probably not, but that's okay. We'll solo it at the moment. So anyways, trading for a living. So that's what, I'm going to try and get a little centered. What I do, what most of the people that I trade with do as well. So if this is your living, this is how we kind of have to roll with it, right? So, oh, Jesse's in. Look at you. All right, I'll get you. Morning, sunshine. Good morning. Yeah, I think I had your audio off just slightly. Should be better. All right. So again, this is trading for business, right? If this is going to be your living, then kind of have to approach it like a job. So that's really what we do. So every Monday when I was in the corporate world, I would come in and we'd have like all hands Monday morning meeting, and we would really just plan out the rest of the week. So we do exactly the same thing in equities and as traders. So today, really what I'm going to do is just going to highlight, and I'll try and make this fairly quick, highlight a couple things from last week that should be important this week and what to watch out for, as well as really what's coming this week. So this week we actually have a big economic week. So we got a lot of stuff going on, mostly in terms of Fed and rate hikes, things like that. So, Jackson Hole, if you didn't know, but we'll get to it. Anyways, before we kick off, really, if you're new to trading options, please call 1-888-OPTIONS before you start trading. Get a copy of Characteristics and Risk of Standardized Options. And again, carefully consider if this is something for you, right? Position sizing matters, and that's going to determine 100% of your profitability, not how good your trades are. So really quick, taking a look at what hit the markets last week, and I'm sorry, my eyes are kind of darting around, also monitoring some trades. Shipping costs, major uptick, right? Inflation started to come down a little bit. We got a pretty big number last week. I think it was it last week, Jesse? I believe so. But
CPI?
yeah, but to note, it came in lower than the week before or than the month before, but it's still going up. So that's really what we need to kind of hone in on, and then we have a lot of follow-ups on that from the Fed coming this week, and it's actually, I believe, going to culminate on Friday when Powell takes the stage one last time. I did catch a headline on some copper squeezes, so I might take a look at FCX Freeport. That's a pretty big copper play. And morning, guys, Tommy, Nick. Haven't actually put a trade on that recently, and it's been pretty been basing. So again, when we look at what's going on, we just closed out earnings season also, and a lot of the earnings were actually a lot better than feared, right? Like that's a typical thing. Morning, Michael. It's a, are we at peak earnings? We probably were in peak earnings a quarter or a few months ago, but it's more about what did the market expect coming into this earnings season, and it seems like they're expecting quite a bit worse than they actually were. So we're seeing some good price action with some actual like bad earnings results, which to me, looking at the market in general, I'm kind of thinking, it's not, I don't see it going really low. I think this downturn might feel heavy, but I would just caution anyone trying to take some new low option positions, things like that. VIX is starting to climb up, and we'll take a look at that as well. A lot of commodity stuff in general, so not gold so much, but I do think it might be basing here. It was copper, cotton, all kinds of stuff, and then the bigger things came in mostly around housing and those numbers. So we'll take a look at the housing numbers, what they came in at. They're super weak, and it's just this economic situation where rates are going higher, right? That's pretty much a given. But the prices are not coming down. So in terms of the housing market, there's actually been a lot of mortgage, companies that were starting to go out of business. So might want to take a look at those, um, and we'll see how they're trading. Right. Generally speaking, I've been looking at the Dixie a lot, DXY, and that's been my main chart that I look at for more of a directional bias. But what you would say, like, is the market risk on or is the market risk off? And the Dixie, if you don't know, that's the US dollar weighted against some of the major other global currencies. And if our interest rates are going up, and historically the dollar is, I guess, said to be the safest place to put any money anywhere, for as long as I can remember. It's not like, going up. But if you compare it to places like, there's so many headlines. Did you see the headline, like Chinese yuan? Like, they're having a serious issue right now.
Yeah.
And if the dollar's the most stable place and our interest rates are going up, then global currencies will tend to flock towards U.S. bonds and things like that, actual treasury bonds, and that would increase the Dixie, which is bearish for stocks. So that's I'm kind of just gonna move ahead. I'm gonna take a quick look. Oops, we did not have 1,500 companies reporting this week. I'll take a look at the calendar right now. That was last week. Earnings calendar. This week we have very few. So we are done with earnings season. We do have some big ones coming in today. Here, I'll just share this. So this is how I typically filter. We got Palo Alto, we got Zoom, a couple of these tech stocks coming in. And let's see, we have a handful of others. We have some buddies that do some things for us with that. Oh, JD today, Zoom, Palo Alto, all today. Intuit tomorrow, Toll Brothers, that's a house. I'll be interested to see what Toll Brothers does tomorrow. CRM on Wednesday, NVIDIA, Snowflake. We still have a lot of these large high flyers. Affirm Thursday. Jeez, Ulta, Best Buy. Wow, we still have a lot to go, but in terms of the volume of earnings, it's not nearly what it used to be. So that said, I'm just going to jump straight into the economic calendar. I used to go and prepare a bunch of slides for you guys and have it all nice and pretty. I think I might still do that, but it takes a lot of time. I don't, and trading's fun. So when there's trades available in the morning, I'll typically take those. And right now I'm in Oxy calls. You probably trim a little bit, but I will see. Oil is a big radar for stock like situation for me. It's actually pretty low from where it was before. So nothing really on Monday. So this is what I'm going to do. This is just a basic economic calendar. It's a free website. When we go through these, what's important to note is the consensus number, right? So just like if you're looking at a company that's reporting earnings, a lot of people, especially if they're newer traders, will try trade earnings or things like that. Or maybe you hold a position in a stock and it's reporting earnings and it beats and raises, right? Like you hear this, oh, beat raise, but the price goes down and you're like, dude, what happened? Well, the reason for that, and the reason any metric like this will move a market or an asset, is because what they actually do doesn't matter, not nearly as much as what they do compared to what the consensus, or you'll hear the street consensus was. That's actually the number that matters. So when you look at this column here, consensus column, what the consensus means is that's what's currently priced into the market. And when we look at economic data, the market is like the S&P and general equities as a whole. If you're looking at specific companies trying to trade earnings, and there's a consensus number, that's what's already priced into the stock. So if it doesn't beat the consensus, or if it's not different from the consensus rather, it's not going to move the market, it's not going to move the underlying. So that's why the consensus is important, not the actual, or nearly as much as the previous. So again, tomorrow we do get new home sales, and I can just drill into some of these, and I'll open like a new tab, and you can start to see, like, these are home sales, right? So this is part of what's going on with the market, and that's really based on the interest rates, right? So interest rates going up that's probably the biggest thing aside from price, right? Well, I think interest rates personally like more important than price when buying a house, but that's just me. Um, if you don't want to take on the upcoming interest rates, right, you're going to have to be a cash buyer, and so that's also one more reason for the Dixie or the dollar going up as well. So a lot of people stacking cash. That's a risk off kind of environment. So you know what I'll do? I'll do last week really quick. So last week, so this was the building permits, right? Came in below, right? So consensus here, below previous, but at consensus, didn't actually move the market a whole lot. Housing starts 1.4. So this is a million lower on housing starts, and we can drill into this guy too. So this is housing starts is like residential, you know, construction starting, and this is a massive decline. So that's the kind of stuff that we're looking at. Retail sales flat on the month. I think we had Walmart. Walmart was an interesting one last week if you were looking at that. So the price went up, but Walmart had pre-announced actually that they were going to miss dramatically, and then they beat what their pre-announcement was. So that's why you saw good price action. You can take a look at the chart today and see how it's trading. But my guess would be that it's probably going a little bit lower. So Wednesday we had our FOMC minutes, and this was the big thing. So we'll take a look at this fundamental event on last Wednesday and see what technical levels it would have created in the market. And again, existing home sales slightly lower than expectation. And we could drill into this as well. So, and look at this as a pretty steady decline. So this is kind of the concerning stuff that hasn't really been brought up in like CNBC or whatever, market TV you're watching, that I think might actually start to happen. And again, one last thing there on oil. So every Friday we get a rig count, and I think we have OPEC. Was it today? Do we have OPEC today? I'll have to check it. But I'm starting to position towards this. We're at a pretty low level for oil recently. To me, it's kind of one of those fundamental things where like the strategic reserves are gonna stop. Like they won't be available to pull from in October. So that's we're August, September, October. So 2 more months. Right now, I do think we're fighting we'll call it like the driving season. So summer is like when everybody takes their road trips typically. Gas was crazy high. So a lot of those equities are starting to base and start to look pretty interesting to me. And so that's really what I'm looking at. So that was last week and what I'm thinking of looking forward next week. And we're going to go back and look at some of those things like the FOMC minutes. So this week, not next week, this week, again, so new home sales, kind of more of the same. Looks like they're expecting, a slightly higher decline. We got one Fed speech. Was it negative 8.1% from the month before? Yeah, it was. So that was a big drop. So we'll see this monthly home sales. That one, yeah, positive 6.3, negative 8.1. That's big. So this one, the month over month number, may move the market. So we'll keep an eye on that. Durable goods, I don't think is going to be a thing. Pending home sales, yeah. Look at this. Pending home sales last month was down 20%. That's big time. That is major big time. So maybe if you guys in chat have any ideas of what we could look at to maybe trade, maybe find some trades around this kind of sector, might be an opportunity to take a look at. Auctions. So this is Jackson Hole. So Wednesday, I believe, Jackson Hole begins, and it actually goes all through the week. And so it'll be Thursday, Thursday, and then Friday here. And on Friday, this is the one. So Friday morning, and by the way, this time zone is Pacific Standard Time, so I live in California, so you'll have to adjust for yours. Friday morning, we actually get the speech of the week, and that's going to be Powell. So there's going to be a lot of stuff that he's looking at over the course of these 3 days, and typically that does increase volatility in the markets, just in general, because you don't know. Like, the market hates uncertainty, and we don't know what he's going to be getting. So the last really FOMC conference or the speech that he had, it was fairly bullish, saying we have a strong job market and everything. So we'll take a look at that. Um, and he gave a end of year target at 3.5% for the Fed funds rate, which would impute a 50 to 75 basis point hike in every one of the next three FOMC meetings or potential rate hikes we have for the end of the year. So that's September. What is it? September? I believe it's September, November, and December. But there's only three. So one of these months we skip. Pending home sales, yeah, this is down. That's a big one. And then GDP may move market. So Thursday we also get GDP estimates. And again, the first version of this we got was it was not. I think they still had it positive, or maybe just equal. No, it was negative. And it was a big thing because we got a negative GDP for the second quarter in a row, which technically would be the old definition of what defines a recession, right? Two negative quarters of GDP in a row, and this was the whole situation where Powell was kind of like redefine, not Powell, but there's another entity that redefines, what would technically, what would define a recession, and because of our strong job market, we're saying, well, it's not really a recession, a soft recession, who knows. Corporate profits. So jobless claims is going to be a big one. So consensus is 253. We'll see what this comes in at. It's been around 250 for a while. If this one actually pops up quite a bit, I think that would be pretty spooky for the market, because if the strong job economy is what's keeping us out of being in a quote-unquote recession, and that falls apart, then that's going to be a big deal. And I think it's more about the white-collar type jobs, not so much the blue-collar jobs or service sector, per se. And we do get PC prices, or core PC coming in as an estimate that won't really move markets. And that's really it. So spending and income. Okay, actual PCE comes in on Friday as well. So we get core and standard PCE. So most of the time we used to look at core PCE. I mean, I still do, and that was typically what the Fed uses as their gauge. And there's a difference. So core PCE and what they call headline. So there's headline PCE, which is month over month, and we'll get year over year. Personal consumption expenditures, by the way, this is basically our inflation rate. Headline, or this top number, month over month or year over year, that includes things like gas, rent, food, all the kind of stuff that's really hitting us. And typically the Fed does not look at those factors, so we have core PCE, but I do think this time around they've definitely been a lot more sensitive to headline inflation numbers as well. So look at this, Friday, huge day. We get consumer sentiment. Consumer sentiment, which anything under 50 is no bueno. We get a Powell speech, PCE, income and spending. I don't know. There's so much to be afraid of if you're an investor or a trader coming into the end of the week. This beginning of the week, we'll see. If it gets overdone, we might see some kind of rallies towards that. If let's say Tuesday, Wednesday, Thursday get a little extended to the downside, we'll take a look at that. All right. So from here, typically what I'll do, I'm just going to jump into the charts really quick. If you guys have any tickers, okay, DRV, all right, I see you, Nick. Cool. I'll keep an eye on chat to see if we have any tickers that we want to take a look at. But this is my view, right? So as a trader, you always want to have your main market view. So right now, for me, I have SPY, Qs, DIAs, diamonds or industrials, and then IWM is your mid caps. So these four are always the four that you want to have as your first look every day. It's super important. This is where you start. For me, on my charts, you'll see these kind of like orange boxes, right? And this is an average week's range. And so the reason why they're super important is because typically if a market or an asset moves an average week's range within, let's say, a 48-hour period, you should expect some kind of consolidation or a holding period, right? We don't want to press our bets too much, and you'll know if the momentum's there. But for the most part, an average week's range is an average week's range, and if you hit that range, then you should expect that the market will start to stall out, and you'll see better returns likely selling options than buying, since we are an options trading group. 40-ounce layoffs, yeah, there you go. Interesting. All right, so I'm just going to take a quick look at the at SPY first. So again, this is a 30-minute chart. I like to use a 30-minute chart because I can zoom out and I can get some a pretty wide view of what's going on. Most of my levels here, I use strat levels. So these kind of automated lines will be a quarterly high and low, a monthly high and low as yellow, a weekly high and low, and the prior day high and low. So prior quarter, prior month, prior week, prior day. These levels are important to me from a technical perspective because that's typically where momentum will really start to build up. So again, taking just an average week's range, and if we were to continue down to this downside from our open here, see this yellow line? This is last week's. Oops, not that. Ooh, is that a fib? Okay, I do have a fib on the larger chart here. That is actually from the high to the swing low. So from the absolute like all-time high to the most recent low. This is in June. Just as a by the way for me, 50% retracement was at 420. And so typically if people trade fibs, and this is kind of like one of those self-fulfilling prophecies, that makes perfect sense why we would flush right here at 420 closing Friday. But that's a downside retracement where people would initially start to look for some downside exposure. And 618 was your kind of like golden zone. So anywhere in between here are your typical kind of like golden zones to look for a reversal or just your retracement from this downside move, taking it back down. The red line, by the way, on my charts, that's a 200-day moving average. I can take this off as it's played out now. And always always like locked on the daily, by the way, for the 200 days. That's just the one that I use. It's always a major momentum like builder. Look at this. This was like a perfect tag right here. So a measured move, just a typical average week. I mean, I'll just go from this gap. Is really what I'll do. So from 420 would take us down to 408 if we continue all the way to the downside. And I marked these kind of like, I don't know if you can see it, but they're like little white dashed lines here. So this is what I was talking about. I want to look at like fundamental events that create technical levels. And so this was the 10th of August, previous week. Was that the 10th? This was CPI. So I want to mark a couple things. So we got our Powell speech, FOMC minutes on Wednesday, the 17th, just around the close. So I'm going to make another. Wednesday is the what day? Wednesday was the 17th. Just around the close. Look at that. Also the peak. Just a speech, and that speech did not have a good market reaction. So this level right here, 429, where it broke down, that's likely. I'm just going to keep this here as a level on my charts for the foreseeable future till it gets there, because that will be one of those events, like a fundamental event that creates this technical level. Moving back further, this is when we actually got the last CPI number, so August 10th, and you can really look. Let's see. Let me change this. So August 10th, core inflation rate. This was the big one. So this was the one that actually came in lower than the consensus, equal to the previous, and that really moved the markets, right? So the month over month was lower than the consensus, and that's the headline number, including gas and everything. If you look at this, this was like, okay, ouch, not the right number, not the right chart I'm looking for. Anyways, going lower net, but we're still really high on this year-over-year inflation rate. But we're at least going in the right direction. This was the second month in a row, and so that is where the buyers really stepped in. This is 412 to me, and I have a yellow line here, so that's last month's, one of last month's levels, last month's high, right? So if this was, what I mean by that, if this was just a monthly chart, simply a monthly chart, last month's high, last month's low, that's what that means. So we'll go back to here. So we're very, very close to the same exact level. 413 would be really where I would expect the first bounce to get to. And then other than that, this is when we got our GDP, like that first potential recession number, and that was at 407. So this is why it's marked, and that actually puts us right in range of an average week's range. So first target to the downside, 413 for me. Jesse, do you have any other like longer term levels, or other than just
You're right in the golden zone that I have marked out on ES. Let me
nice.
pull up my daily chart. But yeah, that whole, I mean, I covered it in my watch list for a few weeks straight. Like we were in this golden zone, right at, I'm on Microsoft. +1.
Yeah, we got some trades really going on.
Yeah, right at 4150, all the way down to pretty much 4100, 4075. Like I told people that if we are going to retrace, it's going to be down to that level, and then if we'll find out who has more liquidity.
Yeah, exactly. So this is what I was gonna say is, and Jesse's saying the same thing differently, right? Like when he says who has more liquidity, check this out. So this was a major consolidation area. This is May to June, and so what's about to happen, or what looks like is about to happen, is that this battle zone, and we'll call it what it is. Like that is a battle zone. So see, it's a battle zone here. Once it re-entered, it base, bounce, rejected, right? And then it finally was able to break out and head back up towards that 200-day. But guess what's happening, right? We're just not re-entering this exact battle zone, right? And so if you're looking at charts and you're new to charting, you kind of want to read them like a book, right? And so it's like it's telling you a story. So who has, you know, the momentum right now? Is it the buyers or is it sellers? Either way, like that's what you're trying to see when you're reading the charts. And really, you know, where did the buyers really step in these couple of zones? It's right here at that 407 level. So at 407, you know, we got this, and on a 30-minute chart you can see these a lot better. So this order block here, here, like this whole level right around 407. Look at this candle, right? That's a big candle. Major defensive here. They bought it up one more time, right? Came back. What happens, right? So there's order sitting here if it comes back to it that you need to be aware of. Same thing, 1, 2, 3, right? If it fails, that's where you want to be really cautious, right? If it fails, this is where you get this kind of flusher, right? And I think if you're short, by the way, in these kind of situations, you always want to have what would, and Jesse probably yell at me for not doing this right. But what would you know, a long entry be? You know, like what would a retracement of this uptrend really be? Either one of these somewhere. So somewhere around this 400 area would be like a typical market retracement, right? Typical market structure, right around, well, actually 397 was my buy level. So if I do get back to 397 on SPY, that's actually where I'm going to really be looking to start adding some new long positions, potentially. I mean, just watching for price action. But this is the same thing. This is where we got that last 75 basis point hike right in here. That's what this is. Major defensive zone, 395, and a battle zone. Top of this resistance, and again a battle zone here. Actually, I believe this pulls way back as well. On the daily chart, you might be able to see it at 393. Yeah, so this was the battle zone right in here, and the major takeoff point from our most recent run. So this level around 395, it's gonna be a major level. And if we do come back down and tag somewhere in here, it's just a higher low, and so we would expect a bounce from a technical perspective. Might not be for a while. But this week, could we make it down to 407? Yes, we could. Again, if it gets anywhere like extended from here, I would not be pressing any short bets regardless of what's going on. You'd have to see the momentum. But again, it's the end of summer. We won't typically see major momentum or major volume come back in towards like Halloween ish, October, September, October. The end of September is typically when we'll see some actual volume come in and get some like real momentum. For now, this is kind of like your choppy, somewhat trendless market, but range bound and can be very profitable as long as you're trading those specific ranges. To the upside, let's say if we do have something wild happen, and we should always have this, right back on an average week's range from our open today would actually take us to 430, which would also be our 200-day moving average. And again, these 200-day moving averages kind of act like magnets. So if it does, if SPY is trading over where's the top of this consolidation range? We need to take it here. 418, probably over 420. Yeah, SPY is trading over. Do you have a level, Jesse, that you're looking at? I'm looking at this. This is
For what? For SPY long or what?
yeah. So I am looking. So right here, this is that last CPI. Yeah, they kind of chased it here at 418, and it is the top of this consolidation. So if we get a strong bounce up above 418 at
Yeah.
some point later on the week, maybe you could, target like a 430 on an average week's range. But right now we're not there. It actually, let's say it bounces here, going back up to probably about 425 if we did something
Yeah.
like this.
I've got 417.50.
Yeah, yeah, perfect. Would be more realistic, right? And you would kind of just wait for it to break above that, come back down, retest, and that would be your entry long. Yeah, that's exactly Jesse's level. There it is. I'm just taking the bottom of this white candle from this morning's pre-market session, right there. So I could see something like this happening if it can't go any lower. But for now, this level here, 417. If you didn't catch sort, yeah, right in here, around this 417 level, just kind of like pause. You could get direction. You could get direction in either way. It could easily be this too. So right around here, that's your pause, wait for direction, don't take a trade, but watch very closely. Cool, so that's a SPY. Q is a little bit different story. They didn't make it quite up to their 200-day. And again, we are coming back into this same type of consolidation zone. So these things are super important whenever you get to them, right? We got, ooh, that's a strong breakout of the first time. Just barely in here and coming back into it now. So this last CPI, we are way below it. Right there. 317 would have been a clean entry short. And I'm getting this CPI number. So this was again where we flipped kind of like, bullish from a inflation perspective. That's right here, 317.81. Above that, yeah, I'd say okay, we can stay bullish. But below it, looks like we're just coming right back to this chop zone. And by the way, you guys, when the market moves this much, let's say if it was from, and we'll just do this measure move again, from Friday's close to an average week's range, that would just take you to 306, which is exactly right back into this consolidation range. So on downside target, that's pretty much where I would put it, just moving on an average week's range. And again, if it does that, I wouldn't, even if it looks like it's going to flush even more, I really wouldn't press any downside bets until it's like way below that kind of range. I just don't. It's a big move, a big gap from Friday to today's open. So typically We might chop around a little bit, uh, and who knows? There's always turnaround Tuesday. That's definitely a thing. Again, taking diamonds here. So from Friday's close here, that would actually, and this has been a stronger index. From Friday's close to an average week's range actually put you exactly on this level at 328. So mark that, and that's that CPI. Yeah, they did not like his speech, the market. It's funny how these things always work out. But again, take this consolidation range. Once we get back into a range like this, expect a chop. It's kind of right here. So across the board, really kind of heading into these zones. We're at the top of them. You know, last week I was thinking like melt up. This looks more like melts down right now. Not flusher, but just kind of melt. IWM on the other hand, that's been a different beast for sure. It kind of does its own thing. This is like redheaded stepchild of the indices. You're sitting right on that CPI level when we got those numbers. So it'll be an interesting take. It has a little bit of a bigger typical move. And this consolidation for them was not nearly like the rest. It's a much larger zone here. Almost back into it. So, but for now, like most of these are kind of, geez, honestly, dude, they could be bouncing right off the top of these consolidation zones too. So I don't necessarily want to press any major short-term bets to the downside after such a big move, but you could leave runners, no doubt. One of the biggest things, so we have in Jackson Hole, we have interest, like it's lots of talks about interest rates, things like that. One thing to note also, so this is TLT, this is the 20-year treasury bond. It's made a pretty big move. I gotta resize this, by the way, that's too big. It's made a pretty big move, but it's come back into this kind of consolidation zone. And what happens, let me see, what's the 10-year note, 10Y? It's the US, right? US 10. This is 10-year, right? So this is whatever it looks like, coming right in on that 200-day moving average. Holy. So I think when we get a situation where interest rates are going up and the bonds have an inverse relationship to the interest rates, but stocks are going down at the same time, one of them is probably going to give. And most likely, I don't think it's going to be treasuries. So watching things like the dollar index here, DXY, this was a big level that it just tagged this morning too. 108. Jeez. Yeah, if this guy gets over 109, that's probably the only situation where I would say, okay, we're going right back to the lower end of that consolidation range across the board. So keep this one on your radars. This is DXY, this is dollar index. This going up, that's that flight to safety, right? That flight to bonds, that risk off kind of mentality across the board. So this is going to be a better fear gauge than the VIX itself. The reason the VIX isn't going to be as good, I mean, it's sitting at 23, but really if you look at something like SPY, right, and if it does come back and just does a typical retracement, right, down to its normal, if I go just from Friday to here, down to here, it might feel violent at first, but realistically, you know, all that's happening is that it's coming right back into the same exact range it's been for I don't know how long. You know, like this is, it's not really breaking any major ranges yet. So the VIX itself, even if it comes all the way down, it shouldn't be at like a 50. Not until it's way below 360 if it does break out into a new range. But this is almost a 4-month range that SPY has been in. But yeah, just keep an eye out, right? Top of this consolidation range, we are below it. If we break down below that CPI level, okay, you know, that's my, what is this, 413, give or take. Then we could take a small, you know, new leg to the downside to 407 at most, and then that's it. If you have runners and you're already in, okay, hold it. But buying here now, with the VIX all of a sudden at 23 from coming from 20, just know Monday morning you get this gap. It's going to be a little tough in terms of like option pricing. Volatility is high, so the edge is not in your favor. This is USO. So this was the one that I was actually looking at. 71 right here is where most of the buyers for oil has really stepped in on, and this is just an ETF. It's not actually crude futures. I don't have a. Let's see if I did go to crude futures. This is not. That's Colgate. Crude futures you'll see very similar. So, but the line here is at 87. So it's not an ETF, but this is where I'm looking at something like this, and with crude selling off this morning, I can see, okay, well they stepped in here, right? They stepped in here, and this is really all you're looking for, you know, like can you find a level where buyers have consistently stepped in over time, and this is how you kind of draw your support lines, right? And so this morning, I actually did go long Oxy, but one, they have the little catalyst, etc. I still think it can keep going, and watching oil down here. I actually grabbed a little Exxon too. But this is just a bounce, right? So do I think it can go, you know, and get back to this 120 on crude, like if you're trading futures? You know, clearly not. It has to get through 95 and its 200-day before you can even consider something like that. But again, this is just how those 200-day moving averages work, using the daily interval, kind of like the magnets, right? So if it tags support, can I expect it to get back towards this 95? I think so, for sure. You have some fundamental stuff going on, but you know, back to this all-time high, we don't really have. It's not like vacation season anymore, so I wouldn't be pressing that high. Cool. So that's for the major stuff right now. For the VIX, really, once we're over 25, if we get to be over 25, then that's more likely to be like selling calls will actually be in your favor for sure. Just be aware, if we see the VIX climbing and we see equities climbing at the same time, that's like your flashing yellow lights. So keep an eye out for that too. So always have VIX, not UVXY. VIX, Dixie, this whole setup. This is for me, you know, always on its own screen, doing its own thing. Sometimes I'll put like Bitcoin. I haven't looked at Bitcoin today, but I know I kind of took a nosedive over the weekend. Yeah, I did. And again, this is just that more risk-off kind of mentality. So back to why is the Dixie important, and more important than the VIX or any of your other volatility metrics. This guy is going to tell the real story, right? It's a global story right now too. It's not just a U.S. story. Let me see, 420. Cool. Tesla. All right, so Jedi's asking about Tesla split. So Tesla, typically what you'll see on splits, I mean, what you used to see on splits is like, you know, the run up. But I think that story is kind of done and played out, and it's almost more of a sell and use situation. So Tesla here, again, Tesla choppy, right? Back towards this 200-day moving average. That's this red line. It's over here, sitting on it. You see, how come we don't have it here? Yeah, you're below it here. You're in kind of a consolidation range. You know, I'll be honest with you. I thought Tesla was gonna make a move on Friday, and I was just wrong. But you know, when something is around the 200-day, I really want to see it further away to get more of a direction. We have a gap here, so 885 is a clear gap on Tesla. I think you probably could fill that, or never mind. Looks like it pretty much got filled in pre-market. So these little wicks matter. I don't know that I would trade towards that gap, but just the same. So this 878 is Friday's low. If you trade in this breakage structure here now, you probably target there, and then at most 885, and then I'd be calling it from there. But this 895 level is last month's high, right? Again, automated lines. So last month's high, And Tesla, if you guys didn't know, Tesla freaking loves its double tops. And so this is your staple Tesla double top right here. I mean, like, you go back on any Tesla chart and you'll see this situation happen over and over and over. So you can look at this on any time frame, even if it's, look at, again, 1 2. So if you get a high and then you get an equal or maybe even slightly lower high on Tesla, just know, hey, watch out. It could be a flusher. So right now we don't have that, but if it does tag this 876, that would be that kind of situation, and I would get out of the way immediately if it doesn't, like, absolutely blow through that level right there. That's what I would be concerned about. It's a scalpy situation here on Tesla, like your precision sniper type entries, quick in, quick out. This is not one where you want to be swinging anything longer term, in my opinion here. Just not yet. Yeah, it's gonna be bouncy. And it's asking DRB. I'm not sure. I don't know DRB, but we'll take a look. Oh, real estate bears. Oh yeah, there you go. There you have it. Look at this chart. Look at you, man. I've not looked at this one before. Yeah, it looks like potentially this would be that level. So it's just moving. But I got that too. I mean, if I could get a pullback around 37 on this guy. These ETFs that are like 3x leverage, you're always gonna have gaps. So I don't know that that's something that I would really look at too much. But yeah, heading back up to 42. That's easy play. Remember this kind of magnet setup. Yeah, looks good. This is the weekly. 2 up on the week. Look at this prior range, takes you all the way to 53. Holy. That could be a good one. Alright, put that on the watch. D-R-E. Cool. And then, what was that China short? Yeah. Potential here. Just rejecting on the 200 again. Maybe not quite ready. I think I'm going to start like a starter actually. Well, this is equities. Maybe ideally closer to 15. Alright guys, Tesla's fit. We have any AMC killing IWM. So we got AMC doing its thing, but AMC had the APE split, right? So we got APE, APE also. Dumping beautifully. No options on APE, by the way. I can't believe this thing opened at like $10. God, it was trading private like 18. Hilarious. But today's the first. This is the one. Oh, they're not gonna, we'll see. A lot of meme news. Market dumps. There's not much to do in the equity market. They like to play with the memes. So, I haven't looked at. So, Bed Bath and Beyond, and I might take a look at this from an IB perspective. Probably super juiced. So I'm just gonna look at statistics. Yeah, highest IB Bed Bath and Beyond has been in forever. 98th percentile IB. I'm just looking at this. So what to do with this? And look at selling some premium. Just big move. This guy basis. $8.50. If it bases around $8.50. Yeah, you could sell a $2 put credit spread and collect $100, and then I would probably do the call side too at the same time. Probably sell 12, 14. Yeah, you could do like a $2 condor for September monthlies here. Maybe even do like a butterfly. Selling, what is that? Next week's $2 butterfly, 10 call, 10 put, and 12. Yeah, you could do a $2 wide iron butterfly on this guy as it's back into this chop zone. Maybe collect some pretty juicy premium. You collect a $1.70 for a $2 butterfly, so $30 max loss if it's outside of 12.30 or below 7.70 in the next week. That's not bad, actually. Never know with these kind of things, but not a huge risk. What else are we gonna look at? Thoughts on Dix? Well, so Jack is asking about thoughts on earnings. So if you guys know me, I don't trade directionally on earnings. What I do is I look at, I need an edge, right? And so as an option trader, volatility is our edge. We will do like another education series, and I'll start off with volatility, so I think it's super important. Essentially, so DKS is Dix, and I'll get to Intel in just a second. So Dix, 9% move, 2%, 4%. This does move quite a bit. So if I can get, if Dix like an at the money straddle, when do they report? On the 28th. No, it's not that. DKS investor, and this is the only really real way to find out, is go to their company website. So tomorrow, that's almost like middle of the day. So the market opens, this is like 30 minutes after the market opened. So maybe at the close, so Dix is trading at $110 right now. If I buy, like, if I look at the pricing of an at the money straddle, it's pricing in an $11 move. So at the money call, at the money put together costs about $11.90, 12 bucks. And Dix looks like it has about an average of probably 10% move. So these look pretty priced to perfection. Not sure. I think this would be more of an Ivy Crush situation on Dix than something that I would trade directionally. Meaning, like, it has to move more than $10 for you to make any money. Intel. So Intel, I did have, so I actually have a risk reversal on Intel right now that I just hedged slightly. Oh, look at that. And I hedged with September 32.50 puts. So Intel broke this. This was a pretty key level for Intel right here. I have no shares. What I did previously was I sold an October $35 put. I collected like a $1.70 to do that, which would give me a net cost if I put the stock at 33.70, and 33.70 is about where we're coming up on right now. And so when I saw it breaking down below this 35 level, which was the prior support, right? This was a pretty big support level here, right? You can see it clearly, right? 1, 2. You guys don't need these drawings anymore, do you? You get it. Okay, fine. I'm already halfway through. When it broke down here pre-market, I just took this one at 35 here. I didn't catch it like exactly at the right time, but I did grab those September 32.50 puts, which are in front of my October short puts. So what I have now is technically called, it's called a reverse calendar. So I'm long shorter dated puts, and I'm short longer dated puts. Actually, that scenario is very much a no lose scenario. So even if Intel goes below my break even of 33.70, I actually can't lose money because the shorter dated puts will be protecting that longer dated negative gamma. If that makes sense. It may or may not. I don't know. But yeah, as long as this continues lower. Right now, this 34.41, it's extended. So these red and green, these are average daily ranges for me. So you're getting a pretty heavy IV pop right now on Intel to the downside. What I can tell you is that when Intel decides to make a move, it typically decides to make a move. if that makes sense. Like it typically moves further than its average daily range. The point of control on this session is 34.17. So anything lower than that, this thing could actually have some downside legs. Um, and I'll just take this to the daily. So daily is, this is your congestion level, 33 and change right here is what I had for a longer term situation. Which you're kind of coming into right now. Not quite there. 33.30 was this consolidation. And if we want to be, let's just iron it. I could probably grab this and be a little bit more specific. 34.50. So what I just now, I just took the volume weighted area here, and so most of this is called point of control, is where most of the volume was traded at 34.84. So if Intel reclaims this 34, call it 85 level, or if you want to be clean, just 35 in general, yeah, it could bounce. But right here, this just looks like could be a quick liquidity grab. I don't think it, well, maybe, I guess 29 at the downside would be max for me. 29 right there. I don't think it could get much lower than that. Yeah, below 33. Where did I get that level? Oh, below 33, okay. 28. That's a $5 range. Not bad for an options trade for sure, especially on something like Intel. Earnings is out of the way. It's not till the end of September. Semis in general was not looking too hot. By the way, my other screen, so you guys saw the first one. There are multiple screens that I have every day. And then the second one is a subsector chart that looks like this on another screen. And really it's just, these are the sectors. So I want to go, what do I do? Yeah, like I used this website the other day. It's pretty helpful. But it's just taking a look at what are the strongest sectors for the day. Everything looks pretty down. That's a clear downtrend. And you can kind of click on each one of these. So like if, all right, communications the lowest, I might click in here. I might look at Facebook or any of these two. So this will tell you like who's the highest weighting in this sector, right? It's a pretty useful tool. Financials, that's unfortunate. Was hoping that they could get a little bit more of a bid, but not really looking too good. And of these, here's the real estate. Utilities, man. Utilities almost hit like an all-time high. I don't know if anybody saw that. XLU is the chart. Let's see if I can get. Looks like it likely ran out of steam. Yeah, look at this. I mean, this is a wild sector. Utilities are typically your next safest bet, at least in terms of sentiment. Yeah, just looking at myself, looks like we're taking that next leg lower. Cool. All right, guys, I think we are good. That's mostly it. So yeah, Intel, big break on support. It could flush a little bit lower, 33 next stop, and if it breaks that, then right, maybe swing to 27. Looked at DRB, nice find, and I think that's it for now, guys. Other than that, if I want to do sectors, what was this? Yeah, just take a look at that sector heat map. I guess it was, right? It's just Sector Spider, sectorspder.com, and you can get yourself over here. It's a pretty cool little tool. Easy 5-day, right? Staples, probably next stronger. Look at this kind of stuff. This is how you want to find your trades for the most part. All right, guys, that's it. Oh, also Zoom today. Take a look at that. I think that one's going to be a mover. I don't know which direction, but Yeah, let's take a look at that for you really quick. Zoom reports, I believe after the close today. Yes, high elevated IV, but big mover. Let's see, ZM, and all I really want to do is see what is the anticipated move. Trading at 97, give or take, right here. It's got a $14 implied move. That's like 15. It's almost 15%. That's pretty high. Although, if anyone could do it, Zoom would be one, for sure. I wouldn't pick a direction on something like Zoom, but if you're inclined, I have a feeling this one could be a mover. We'll see. All right, guys, that's it from me. Adios.